This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by.
Good afternoon, everyone, and welcome to this afternoon's meeting of the Audit Panel. First item, apologies for absence.
Thank you, Chairman. No apologies for absence received today.
Yep. And can I just make sure all your electronic devices are turned off or set to silent? And I'm asked to remind you, if you do need to move your microphone, aim a little bit towards your mouth, and if you need to pick it up by the bottom rather than by the neck. Just good advice generally, I think. Before we begin, I'd just like to welcome all of our guests who will be joining us at various parts of the meeting. I'd like to say hello to everyone at the beginning. So we have Stephen Reed, who's a partner at EY, who's here in person. We have Chloe Wilkinson, Senior Audit Manager from EY, who's here in person. We have Enver, who is Interim Chief Finance Officer for the GLA, who's here in person. We have David Esling, Head of Audit Assurance and Risk Management at MOPAC, who's here in person. We have Mark Woodley, Group Audit Lead of MOPAC, here in person. Karen Welsh, Senior Risk and Assurance Auditor of MOPAC, who is online. Femi, I should have checked this more closely before I started rushing into it. Olatidoye, is that the correct pronunciation? Thank you. Femi Olatidoye, who's Deputy Assistant Director of HR and OD, who's here in person. Shao Rodriguez, who's Head of Strategic Resourcing and Talent, the People Function, who's here in person. And Avril Lynch, Strategic Resourcing Project Lead, who is also here in person. Hello. I also have Jen McKenna Percy, Principal Programme Manager, Policy Officer, Transport and Environment. Waving. Yes, I was thinking that I'd gone all the way along the gallery and I had another name on my list, which has confused me. And Helen Ewan, Executive Director, Secretariat, who is also here in person, but I can't see yet here. I'm sure she will appear as if by magic later on. Also, Catherine Barber, Assistant Director, Environment and Energy, who will be here in person later. Io Akande, Assistant Director for Delivery Skills and Employment, who is joining us online. And Paula Mulroney, Audit and Assurance Manager, Skills and Employment, who is joining us online. So somewhere amid that cast of thousands, I think we'll find our way to we've got a couple of bits before we get to our main substantive items. We have declarations of interest. Can I ask the panel to note the recommendation set out at item 2 and ask if members have any other interest to declare? Nope. Excellent. Item 3, membership of the panel. This is our first meeting since we were officially reconvened following the AGM. So can we note the membership and chairing arrangements as agreed by the London Assembly on the 10th of May 2024? I suppose you must have noted that, otherwise we wouldn't have all the correct people here. Item 4, terms of reference. Can we note the panel's terms of reference as agreed by London Assembly also on the 10th of May 2024? Agreed. Excellent. Standing delegations of authority. Can we note the standing delegations of authority to me as chairman of the panel as set out of the agenda? Agreed. Excellent. And finally, can we confirm the minutes of the meeting held on the 28th of February 2024 to be signed by me as a correct record? Well done, the other person who's continuing from our previous year. Good. So that brings us to our first real item, which is item 7, External Audit Planning Report. We're joined in the chamber by Stephen Reed, partner at EY, and Chloe Wilkinson, Senior Audit Manager at EY. If you could introduce the GLA Group Audit Planning Report for the year ended 31st of March 2024.
Thank you, Chairman. As you'll be aware, up until this period, the audit partner on the audit was Janet Dawson. She reached the end of her tenure of appointment of 5 years, and I've taken over as audit partner for the audit of GLA for 23-24 onwards. So the document before the panel today summarises our approach to the external audit for 23-24. And I want, Chairman, just to highlight a few aspects of that, focusing particularly on the overview of the audit strategy. I'll take the paper as read, but refer members to the new risks or any changes in risks. So first one is on page 17, which is in relation to LTLF, and the reason that is a new audit risk for the year is purely because of the change in activity. So we're anticipating those numbers becoming material for the group and therefore require more focus from us as your external auditor. Moving on then to page 20, there are 3 new risks or changes in focus. The first one there in relation to OPDC refers to the fact that, again, there is increased activity through OPDC, and therefore we, as your auditor, will require to pay more attention to those numbers. In relation to going concern, we've had discussions in previous years in relation to going concern, and last year made some observations in relation to the disclosures, so the narrative disclosures. So our focus this year, and the change in focus, is purely one on the nature of the disclosures and the narrative supporting those. And then the final change in the risks from the prior year audit is in relation to the group boundary assessment. And similarly, in relation to LTLF, there has been changes there, and management are proposing to change the way in which that is consolidated into the group, and therefore we need to give some consideration to the group boundary assessment and what makes up the group financial statements. Two other aspects of the plan, Chairman. One is in relation to materiality. So the basis on calculation of materiality remains unchanged from the prior year, so draw that matter to your attention. And then throughout the rest of the report, and particularly in the appendices, I summarise those matters that I'm required to report to you under professional standards. So let me pause there. Very happy to take any questions or observations.
Turn my microphone off. Any members of the panel have any questions, either on the external audit report itself or on the narrative just raised? Yes.
On the external audit report itself, so one of the significant risks that keeps on coming up is the E20 stadium. So it's probably not one for the auditors, but one in response to the significant risk that just keeps on being identified every year. There's no changes as well in the audit report that we've received today in front of us. What is actually being done to help mitigate or reduce that risk? Probably looking at Enver for that one.
But the risk on the E20 is primarily as a result of the onerous contract, and you can't do anything about it. So what we do is we each year look at other costs that are around it, but it will be loss-making for the foreseeable future on the E20. E20's ownership will change in the coming year as LLDC's transition moves forward. But I think, limited on what I can say here in a public meeting, we've got a 99-year onerous contract in that space, so, and that ties up how much we can and can't do. So I can't give you anything more assuring. I mean, you'd have to ask E20 and LLDC the detail of their question, but based on what I've seen, it's a loss-making organisation for the foreseeable future based on that contract.
Well, not great, obviously, but what lessons have been learned to make sure we don't get into such contracts in the future?
Well, this administration hasn't got into any such contracts over the last 8 years, so this contract was signed back in 3 mayoral terms ago, and so we haven't signed one since. So I'm assuming that the organisation has learned from that you don't sign off contracts that potentially make a loss. So all contracts need to come to me to sign off, and I'm unaware of any that we've signed that have got those similar sort of consequences to it. And we don't have any other stadiums to sign in such an agreement. So you'll know the history of the E20, where the people that advised on that particular the contract have actually been sued, and compensation was paid back to the GLA for that.
Great. And just another question, this is on a separate issue, on the risk identified on the valuation of property assets. So are there any ways that you can suggest trying to mitigate against that, whether it's getting multiple opinions on valuations, or any ways in which that can be mitigated?
Thank you. Property valuation is an interesting one in the local government sector, because it is always an area where auditors pay particular attention because of the requirements for the periodic valuation and the basis on which organisations are required to prepare their financial statements. There is a review ongoing at the moment by SIPFA to look at over the medium term, the approach to accounting for property, plant and equipment assets. And clearly, as auditors, once the outcome of that is known, that may lead to a change in approach. But until then, based on how organisations must account and what the auditing standards say, as auditors, we need to pay attention to both of those and discharge our responsibilities accordingly.
Right. And this SIPFA piece of work, it's for the public sector in general?
Okay. It is. It's for the local government sector. Members may be aware there's been some degree of debate across the sector, local government sector in England, about the audit delays, so the local audit market reset. And as part of that, SIPFA has committed, I understand, to carrying out a review over the medium term into a number of areas, and property, plant and equipment, and how that's accounted for as one of those areas.
Okay. Thank you.
Okay. Somebody remember Buster? Apologies, my
Thank you, Chair. Enver, sorry, just come back to you about the E20 stadium. Obviously, I'm new to the London Assembly and the committee, also on the Budget Committee, and that really flashed up when I was looking through the paperwork for the Budget Committee as a topic. So just to get some clarity, perhaps, in terms of when it was signed, what was the scheme of delegated authority at that time, and has that scheme of delegated authority changed as a direct consequence? Because it's great to hear that obviously you've not signed off on any similar contracts subsequent to that during your tenure, and the Mayor hasn't during his, but so when did that happen, and have there been changes to the SODA as a result of that?
I don't know the detail of when it changed. When it happened was somewhere between 2014 and 2016. The agreement was pretty much that every time the seating arrangement has to change to use the venue, E20 picks up the cost, and that cost gets passed to LLDC. The governance at LLDC normally requires that such contracts come up to the LLDC board, and we have an LLDC liaison board, and those conversations take place there. So we get cited on any such contracts from now on. When that came in, I don't know. It's been in place since I've been around, at least for over 4 years. So the changes would have been made sometime between when that deal was signed and 2020, but I don't know the exact dates. But I can find out if it makes a difference to you.
So I guess the question really is about, was the scheme of delegated authority and the processes that were in place at the time, were they followed or not?
Well, they were followed because it was signed by the Mayor
Right.
at the time. So it was signed at the highest authority. But it was the Mayor, and that Mayor signed it.
Yeah. And so the follow-up, and I'm not sure if we're able to share that in this location, but in terms of the cost, the impact, the annual impact on the revenue for the GLA budget?
It's a minimum of about £4 million loss a year, if not more. I think the impact has been reduced to 3 or 4. Certainly on my tenure it's been about 3 or 4, but I think the gap was bigger before. So we've done everything we can to bring down costs of running the venue, but every match costs us more money than when there isn't a match. So it's actually cost more money to have a football game than not have a football game.
So in your role, you've got to currently budget for a £4 million deficit in that particular area annually?
At least, yeah.
For 99 years?
Yeah.
Okay. And then, sorry, just to move on, thank you for that, Enver. So just onto the OPDC, we talk about, you flagged the risk around, obviously, a substantial amount of capital investment that's going to be going forward. From my point of view, I presume that the risk is about making sure that we are ensuring we've got the right resources to project manage that spend. Going back to those issues of ensuring that the spend is managed properly. What have you seen in terms of assurance of the current level of resourcing within the organisation, or what's required to reduce that risk going forward?
So let me take the first part of the question in terms of the role that we'll execute, and then perhaps management are able to pick up on the resourcing. The year-end audits are about to get underway. Some of them has, from the group perspective, already commenced. Our focus, as from an external audit perspective, will be on the application of the accounting requirements in relation to the expenditure, to make sure that any money spent on capital capital is correctly classified, rather than from the project management perspective.
So the organisation itself is still a relatively small organisation, but as Stephen says, the level of expenditure on the capital side is significantly increased. It looks much more than it is, because they've basically bought 4 or 5, maximum 5 parcels of land as part of that land assembly where the Oaks Common station is. So between North Acton and Oaks Common, there's some parcels of land that are in private sector ownership, whereas the ones that are in public sector ownership will be transferred to OPDC between now and 2029. So it's not a financial transaction. The land will still be held by those public sector organisations, but OPDC will parcel it up as a single development. The ones where they are spending the money is basically acquiring land, either just land, or there might be a premise on it, and they're paying the market value for that. So in terms of additional resource, it's not that much additional resource that's required. They have improved the size of their strategic management team at OPDC. They've got a permanent chief finance officer there. They've got a director of regeneration who moved from Homes England to that, and that person is overseeing these acquisitions, and then they update us on those acquisitions when we meet them at least once a month with what they're doing. And the accounting of it, even though they do it through their books, the finance team at the GLA works in conjunction with them so that we see full transparency, and the money that leaves to pay for it has to go through our treasury team, which I approve. So we're probably about as close to it as any organisation can be.
So you can say that you're satisfied with the new individuals who have come into OPDC to manage it from their side, and you've got sufficient oversight. And
I am, and they're giving me privately the list of other sites that they're going to acquire. In fact, my team and I were there last week, and on top of a roof they pointed down to all the other sites that they're going to buy. What I can't say is whether those sites are value for money, but I do know that we need to acquire them in order to complete the development. So I can't say we're making a bargain, because the people might be listening and might say, well, we should charge you more for it then. So all I know is how much they're spending on those sites, and those will go through the books, and our EY colleagues will, I'm sure, no doubt test the value of those acquisitions and let me know if they think they're not good enough.
Well, feeding back into the question that obviously was asked by Assembly Member Harani earlier about the valuations of land on a different part. Yeah, okay. Well, thank you very much. Thanks.
Okay, I don't see any other indications. I think the questions I had, I think, have been covered. So thank you very much. I don't think we have any other questions on the external audit. Thank you for joining. You're free to leave, and by free to leave, I mean encouraged to leave, because you possibly gathered earlier. There are more people loitering in the wings looking for those seats. So thank you very much. Thanks. I'll see you next time. Okay, that. So can I ask, formally, I must ask members to note the contents of the External Auditor's Greater London Authority Audit Planning Report. Noted. Excellent. Well noted. That brings us to item 8, which is a sort of series of sub-items. For those who haven't been here before, we, rather than do the whole thing all in one go, we go through each appendix at a time. So if I could, let's see, we're joined by David Esling, Head of Audit and Assurance, Mark Woodley, Group Audit Lead at MOPAC, and online, possibly on the big screen imminently, Karen Welsh, Senior Risk and Assurance Auditor at MOPAC. David, if I could ask you to introduce each report, and then relevant officers can expand further.
Okay, thank you, Chair. I'll start with our progress report. This is the number of reviews that we've completed since the last panel meeting in February, and takes us up to the end of June. I will generally take it as read. However, I will just highlight a couple of things. One is probably in the counter-fraud work, where we are, one thing is we're working with TfL counter-fraud to identify public sector fraud. So it's a good piece of work that we're engaging with them and wider London public sector bodies. So they're coming and we're sharing information and intelligence, and that's working really well across all the bodies that we're currently involved with. I'd also like to mention the National Fraud Initiative work that we're currently coming to the end of, completing that, and that cycle will be beginning again in October. You will see some specific reviews, I'll call them reviews and investigations that we're currently undertaking. Haven't really got anything further to add on those than that's already written in the update paper, but obviously willing to take any questions, and after that then we will go into the annual report, and then those individual reviews that have been completed, we'll talk to those, and Mark will take each of those in turn.
Okay. Just before we do, I mean, those two of those, the one in paragraph 3.2 and the one in paragraph 3.3, did sort of jump out. Mm-hmm. One was the last sentence of 3.2. So we're talking here about the, apologies for the benefits of people who don't have the paper in front of them, the adult education budget funding providers. The second example mentioned, which says is at a fact-finding stage, but, you know, in a nutshell, false learner and employment records used to obtain over £900,000 in grants. So I think the previous example mentioned in the report, there was no money handed over. It was picked up and stopped. But this one, money was handed over.
Yeah, so this as it states there, so what this is, we're currently looking into this in more detail. I can't really say anything more, but we will update the panel at the subsequent meetings, other than to say that we are looking at recovery of those monies, and we usually are quite successful in that, but I will update the circumstances of that at the future panel meetings.
But by funding provider, what does that mean? Is that like a FE college or something like that?
It's usually contracted out to it's via an FE college to a provider that's providing that educational, dependent on whatever the nature of the service that they're offering. But it's a subcontract effectively from an FE college.
Okay. So then the potential area of concern is between.
I think at previous panel meetings you've probably unfortunately a number of examples. So we are focusing much more of our work, and I've had a conversation with Enver last week where we're going to be looking at AEB generally and those providers and how those contracts are delivered in particular, because these examples are.
Just sorry, to for my own mind. Then. So we allocate the funds to colleges, and then it's when the colleges effectively subcontract it out, presumably to a multitude of these providers, and it's at that second stage where I'm going to be careful how I don't want to accuse anybody of anything, but it's that second stage where question marks are arising in people's minds and microscopes are being applied to bits of paper.
In this, we talk about due diligence. So it's effectively they will submit an invoice for payment of a service of individuals who have received that service, that education, whichever one it'll be, and that's where some of the discrepancies we found do occur. So it's a case of following those up.
And there's enough evidence to lead you to think that it's worth a closer look across the board rather than just one or two isolated examples? No,
we are, as I say, we are factored that into the audit plan. So it's an ongoing process and review to undertake this type of work. So we do have, it's a higher risk. So there are some concerns there. So we have taken that into account in our internal audit work.
And when either this specific case or it's hard to give a timescale on a specific case, but the broader work that you've just talked about, what's the sort of rough timescale for that, do you think?
The general review in the plan, so that's later in the year, so that will be a focus piece of general internal audit work. This review, it's still at the stage of investigating, so it's difficult to say. However, we will update the panel at each stage.
Thanks. I don't know if I can speak for the whole panel, but I think it is an area it's a bit alarming that it's, the cockroach theory, when you turn the light on in the kitchen, there's a cockroach. Yes. There's probably not just one. I think that's my thought process on this. Yeah. The other one that jumped out at me, paragraph 3.3, which was subtitled Theft by Contractor, £180,000 siphoned into a private bank account rather than HMRC, which seems to have been picked up by HMRC.
Yes, and it was, and it's so what we've done here as our counter fraud managers is liaising with the MPS Economic Crime Command Unit, and now they've taken it up as an investigation themselves. So we're liaising with them. It's because it's an external provider. The GLA haven't been impacted on it. However, it's of concern that this type of fraud can occur. And it talks about the due diligence process where the individual had previous criminal activity and been found.
Previous convictions for fraud.
Which is a bit of that's the concern inside of that. So look, we'll focus more on that due diligence that's undertaken in those circumstances.
So the loss there, though, was not to the GLA or to the domestic abuse accommodation. I'm assuming that's a refuge. It was HMRC's money that was missing. Yeah. And they seem to have picked that up quite promptly.
Yes.
Okay.
Which is good to know.
Before we move on to, I don't think I had anything else on that sort of first appendix. Before we move on to Appendix 2, did anybody else have anything on Appendix 1? Yes.
So, thank you, Chair. Just on that same point, really. So just in terms of, given the criminal activity and given the vulnerable users that the service is supporting, just wondering in terms of the due diligence process whether a DBS or similar checks are appropriate for this sort of circumstance. If not necessarily a DBS, then something similar to that which would have pulled up as criminal activity. Yeah.
So on that, so we are reviewing the due diligence process of which those factors we will look into, and again we will report back to the panel on the outcome of that. But yes, I mean that's part of that process we'll be looking into exactly what the due diligence encompasses. And DBS would obviously be a factor that we would consider or should be considered, and we'll see how that's actually undertaken.
And is that something we can apply to other subcontracts effectively across the board rather than just in this specific instance?
Yes, so we'd always be looking at best practice. So any reviews would be undertaking any factors and any good examples of best practice we would carry across to other review areas that we obviously undertake audits in. So yes, the answer to that is.
Thank you. And one final question, just in relation to making sure that such individuals are perhaps on a list of individuals that we would not engage with or ensure that are not engaged as second party or third party contractors, and whether for example if they were able to take up a directorship of another organisation or company in the future, for example, making sure that that's encompassed within any due diligence going forward as well.
Well, that would be, but obviously that would, if they're found guilty, then they'd be removed from any businesses, so through a company's house. So we do any checks going through to the due diligence point. We would always look at company's house and look at directors who have been taken off the list for whatever reason. But yes, so that would usually be through any criminal activity. So if they've been found guilty in that, then that would factor through. It's difficult to say if. I think it's that internal knowledge. Going back to your point about taking that forward and looking at best practice, we'd be ensuring that that company knowledge and where we get that from. Usually, we'd say company's house is a good start. Then you look at financial accounts, and those other factors that we'd be looking at as best practice that any contract that's going out there should be looked into.
Okay, I think that's it. We can move on to Appendix 2, which is also... Is that you, Mark? You're introducing that one, or David?
Yeah, thank you, Chair, again. This is the internal annual report, which we, as the head of internal audit, I'm required to put together every year, which takes into account all internal audit work that we've undertaken in the GLA. And I then have to come to an annual opinion, which also feeds across into the annual governance statement that the GLA put together. Just a couple of things on this. As you will see, it states that I am required to do this, and my opinion for this year's the GLA's framework of governance, risk management and management control is effective, and audit testing has demonstrated that the controls to be working in practice are in place, and where weaknesses have been identified through our internal audit review, and obviously recommendations will have been made, and where we've worked with management, the appropriate corrective actions and any frameworks for improvement have taken place. So as you'll see, the final sentence is, the overall opinion is that the GLA has an adequate internal control environment, which is generally operating effective, which is an outcome of the reviews, which the rest of the report underlines the areas that we've undertaken to arrive at that opinion. And then further down you will see the number, and this is, sorry, just taking down, it's page 94, the reviews that have been undertaken during the year to arrive at that opinion. Willing to take any questions and any, provide any more detail, but take it that the annual report is as read.
Okay. Did I see an indication?
Not on this.
Oh, not in this appendix.
No, not on appendix 2.
No. Okay. Alex, no. No. No, I don't think I had any specific questions on that. Let's move on to, in that case, Appendix 3, use and control of agency staff.
Yeah, so for these following reviews, Mark will take you through each of the papers in turn, and then officers will be here to answer any supplementary questions on those reports. Thank you.
Okay, this is the audit of the use and control of agency staff. This audit reviewed the arrangements and processes in place for the approval of the use of agency staff. We looked at a sample of recruited agency staff and reviewed supporting information and the approvals process. We also looked at the management information produced and the monitoring and reconciliation of agency staff. We concluded an adequate assurance rating that risks are generally managed effectively, although improvements in the application of controls are required. We made 6 recommended actions, all of which were accepted by management. Our key findings were that clearly defined policies and procedures need to be developed to reflect the requirements and good practice for hiring managers to effectively manage agency workers. Hiring managers need to be reminded to complete the approval for a temporary agency worker form at the order request stage. There was no evidence provided to confirm if any monitoring was carried out to ensure business units were actively seeking to permanently fill the posts both internally and externally, and not using agency staff long term to avoid going through the recruitment process. The status of agency staff in post for over 12 weeks needs to be monitored and reviewed. We identified that hiring managers need to check with Reed that agency workers who are required to do over 48 hours a week on average have opted out of the maximum weekly working time limit, and that hiring managers are reminded of the working time regulation rules through policies and training. All expense claims need to be supported with receipts prior to approval for payments. And finally, reports generated on agency staff not being used effectively to monitor the overall cost benefit of using agency workers in establishment posts. So there were the 6 key findings. I think Zhao is here to help answer some questions as well on this one. So.
Okay, I think we do have some questions. I don't know whether there's any sort of general comments you wanted to make on on the report, or the sort of general intro before we launch into questions. No? Great. All in favour of saving time, very efficient. I think, Bassam, you did have some questions.
Thank you. Obviously, a number of things pop up from this report. So, just first of all, in terms of management oversight, and obviously there are processes in place, but simply not being followed through. So, what are we changing to ensure that there is a higher level of compliance, and is there an opportunity to use the IT system, HR system, to ensure that it doesn't get through to the accounts department without having the necessary approval in the first place, or subsequent approvals for extensions?
So we've already made those changes, and apologies for my voice, I'm feeling a bit unwell today. So it's now mandatory to complete the form and upload it to the system, where before that wasn't the case. That then comes to my team, and then they will review it and approve it. So if it's not got the form attached, it's not got finance or executive director approval, it will be declined, rejected, and pushed back. We are also looking to move that form from a Word document to online. So from an audit perspective, we can then run reports from the system, and it will tell us exactly when they were submitted with timestamps as well. And we went live beginning of July with guidance to hiring managers as well to support that process, and how they should follow that as well. So they've got that guidance, whereas before, as the audit stated, that wasn't there. So we've implemented that already.
So that's great to hear. So with the introduction of any new IT system, clearly there's making sure that users are doing things properly. You said you just introduced it a couple of weeks ago. So when will you be looking to go back to members of staff to ensure that that process is well understood and being implemented properly?
So with the moving to that online form, I think it was this morning actually, we wrote out to the executive directors to book in demos to run through it with them. And then we'll be monitoring that on a weekly, monthly, and then going back to people board with the results and how that's going. So over the next few weeks, we'll be running those demos to go live at the end of July, and then that will remove that form, and it will be all on the XMS, the online system.
Sorry, I thought you said it was start of July, so end of July.
Sorry, start of July we implemented the guidance,
right.
So that's now live on the intranet, so people are aware this is what we're going to be doing, this is when it's going to be going live, and then we're running with the demo sessions over the next couple of weeks.
Sure, great. So with this new system, will that allow us to be able to see how long agency staff have been with us for?
Yes.
Yeah. And in regards to who's going to be reviewing that to ensure that if there are any red flags, that's escalated?
And that'd be myself and my team. We did present to People Board last month with agency spend controls, and we'll be going to People Board with sort of quarterly updates on those lists of individuals, and those that sort of go past that threshold, what the plans are as an organisation to whether we're moving to permanent or if there are other reasons why they've been here over X amount of time.
I was going to move on to the working hours limit. Yeah, sure. So at the moment, obviously, a number of people working over 48 hours. Clearly, there's a responsibility on Reed as the employer to ensure that that paperwork is signed off. So are we... well, first of all, I guess, how many members of staff in that sort of situation do we believe should be working over 48 hours, and how many are?
Well, nobody should be working over 40 hours, to be fair, first, from a wellbeing perspective. So by default, when they sign the recontract, they opt out, which means they can work over 48 hours. We have quarterly performance meetings with Reed, of which we've now included as part of the metrics to produce these reports for us. So we're able to sort of monitor that moving forwards. We did do a check ourselves, and it was a really small number. We did speak to the hiring managers, the line managers in this case, and there was reasons why that specific period of time they were doing those hours. But everybody has signed to opt out, meaning if they need to, they will work over 40 hours. But the metrics now, quarterly performance review meetings, we can monitor that at detail.
And again, great to hear that you feel the answer should be zero, and clearly there's an impact, as you say, on health and well-being. So how are we making sure that we are monitoring both ourselves and Reed as the employer there in terms of those individuals' health and well-being? Yeah,
so as I say, my team meet with Reed as part of the performance meetings on a quarterly basis. I mean, we have weekly meetings with Reed, and these discussions are now taking place, and where they're flagging to us anybody who's submitted timesheets over 48 hours, which my team then speak to the line manager to understand why that's happened. And if it's flagged more than 2 weeks in a row, then that gets escalated to me, and then I pick that up with the line manager, and then it goes to the executive director as well.
Okay, great. And sorry, just connecting with one of the points that came up in a previous report, but some permanent members of staff actually who are making significant overtime claims. So are we, sorry, I don't know, Joe, if this comes under your remit or somebody else's, but just in terms of making sure that those processes and those flagging happens for both permanent and for agency staff, because we've got a case there, obviously on the previous report, where we're talking about very significant numbers of hours of overtime on a sustained period of time, and so making sure that the flagging that we're putting in for this system also applies to permanent members of staff.
So it doesn't sit under me, but I take that away and pick that one up to make sure we're aligned.
Thanks. And do we know, in terms of what's our policy around the 48 hours and making sure that that policy is legally compliant as an organisation?
I would have to take that away. Yeah. It is in policy. I just don't know the wording. But it is in there because we did check once this order came out to make sure it was in there.
Okay, and yeah, it'd be great to just get some of the that breakdown once you've got the system in terms of where these members of staff are sitting, what periods of time, what types of roles they're carrying out, and so on. Thank you very much.
Yeah, I appreciate you won't have seen our previous report. So there were 3,035 hours between two members of staff in one financial year of overtime, which was quite a lot of overtime for two people. And so there was a question mark against that. And I think that's really what you were getting at. If people, there's two reasons why people might have very high hours claims. One of them is a concern about excess hours. Another one is a concern about what we might call excess claiming for hours. So I think that's what you were getting at. Kripesh, I think you had a question on this as well.
A couple, to be honest. So the contract with Reed commenced in 2021 and is there for 3 years with an option to extend for one. We're coming at the end of that, at the end of August. What are the thoughts on whether to extend or go out for fresh?
So the contract's managed by TfL Procurement. Obviously, so it's TfL, Met Police, and the Fire Brigade and ourselves as part of the framework. You are right, we're extending for another year, taking us to summer 2025. We are starting the tender process now, which will take us to August 2025, where whoever that may be will be implemented. So that's commencing now, but we're obviously extending that year to cover that gap for summer 2025.
Sure, and my next question is more probably stemming off an observation just of being at this place for the last 3 years, just about the roles that we have that are, you know, where there are no complications, but it's just like-for-like replacement or recruitment that we're going out for. How much money do you think we can save? We can get that process swifter so that we're not having to hire temporary or agency staff to backfill posts that we know are going to be vacant?
Good question. Probably substantial. So we are getting there. There's a lot more we need to do. We're on that journey. We are seeing a reduction in agency staff usage. So I think as of today we're on 90. From my experience, the average is 10% of your total workforce is agency staff. So I think we're there. There is a lot of work we're doing as a strategic resourcing team to work with TfL Shared Service in terms of how we recruit, where we recruit to bring in the right talent. And we're on that journey. But there's a long way still to go. But we should see that number reducing, and obviously the sort of the figure amount spent reducing as well.
And is there any work underway to make that process a bit swifter?
There is, yes. So there's been lots of continuous improvements since Shared Service went live in terms of new systems. So hopefully September, October this year, we're moving to a new system, moving away from what we call Taleo to SuccessFactors on My HR Cloud. So making candidate journey experience easier, as well as the line manager, hiring manager. We are advertising in new places, better places, so we're attracting better talent and more talent. And we're going out and getting surveys and feedback as well to improve. So that's continuous improvement, which we've been doing over the last 18 months since I've been here. And we continue to do that. And then there are other things we're talking about as well, which is EVP, so employer value proposition, so how to be attract and retain. Because a lot of feedback we get sometimes, pay is the issue. Sometimes it's not, it could be many other things. So the team are doing that work to really understand what we need to do as an organisation to bring in the right talent and then retain them as well.
Sure. That's it.
Okay. Yeah, it seems to be the sort of top line question here is obviously about the proportion of staff who are agency and the decisions being made by hiring managers about whether they go for an agency staff or a permanent staff, and then if the agency staff is there for a long time, at what point would they transition, if at all, to a permanent staff? So I don't know, from your point of view, what has changed, do you think, with this new process that's coming in? How have what I might think of as the sort of systemic pressures, the general influences on hiring managers, have they changed in relation to those decisions?
We're having those conversations, those challenging conversations, of me being honest. So I wouldn't go as far as saying we've gone down the workforce planning cycles as such, but the team and I will have those regular conversations. We have those discussions of, what do we need to do? This individual's been here X amount of time. Should we start a recruitment competition? Is it a permanent post? Is it funded? And if so, do we go out externally, or actually, we've got the option of temp to perm as well, which we've seen an increase, which we're doing to try and reduce those numbers. So it is having those conversations, which sounds simple, but they are challenging, as you can imagine, and we're doing more of those. I work with the HRBPs within all those directorates as well to facilitate them.
I think it might be one of the ways that I get to be chair of the audit panel is that I always am interested in processes and systems rather than conversations. Not that conversations aren't lovely, but really my question is about, so have the processes and systems changed that constrain, direct, trammel in some way, guide, encourage what they do, or is it a sort of softer approach, which is what you're describing, of having conversations, because it's quite a large organisation.
Yes.
And I don't know how much time you've got in a day, but it sounds like a lot of conversations.
It is a lot, yes. So I guess in terms of organisation I've worked for, it's one of the smallest. So the process have changed because we have moved to a shared service. And we've been, as I said, continuous improvement as part of those processes. But it has been having those regular conversations with the directorates and having those challenging conversations, where before that probably wasn't the case.
But the process is now what they do make it more difficult. So if a hiring manager thinks, I want to get 5 people, 5 agency staff, 5 permanent staff, or some combination, the process is now do nudge them more towards 5 permanent staff, do they?
Yes.
Or do you pop up in their office going, let's have a conversation about your hiring decision?
I probably do, to be fair. That's probably why they avoid me. But we do have those conversations. So, we see everything that comes through. It goes through my team. And things like that are flagged, and we have those conversations. From my perspective, I want to attract the right candidates and retain them. And if it's a permanent funded post, then they should go through that route. Now, understandably, if you've got a gap and you need somebody in there tomorrow, the agency route is the quickest route. And we do facilitate that, but there is a plan in terms of what we're going to do longer term, and that's where the external competitions then come into play.
Okay. I suppose my question is then the outcomes, but that's probably a question really for the oversight committee, which I think this has been to already. But are we, just very quickly then, are we seeing the outcome that you're after, which is a switch over to permanent?
We are, yes. And like I said, we've actually seen an increase in temp to perm as well. Yeah. So not necessarily having to go out to external, because you've got the right candidate already, they've gone through a competition, so let's move them to a permanent post.
Okay,
position.
Great. I don't think I have any other questions, no other indications. Thank you very much.
Thank you.
That takes us on to our next appendix, which is Future Neighbourhoods 2030, where I think we're joined by Jem.
Yes, hello.
Okay. So,
shall I?
Yeah, I was going to say, apologies.
Do the little summary. Yep.
Yes, if you could do your usual intro, Mark. And then
okay.
Thank you very much.
We reviewed the adequacy and effectiveness of the approval of the Future Neighbourhoods programme, including accountabilities and monitoring arrangements. We reviewed the awarding of monies, ensuring agreed processes were followed, including the bidding and awarding of funds, and evaluated the effectiveness of management information and reporting to ensure that the success of the programme is properly evaluated and reviewed. We concluded an adequate assurance rating, that risks are generally managed effectively, although improvements in the application of controls are required. We made 4 recommended actions, all of which were accepted by management. Our key findings were that details of claiming funding by 2 delivery partners was included in the funding agreements with standard templates for submitting claims. However, funding had been paid to the 2 delivery partners up front, which was not in line with the signed funding agreement. Monitoring forms from providers need to be fully completed with all required information and correct RAG ratings shown to indicate milestones which have not been met. Minutes and actions should be recorded for progress meetings, clearly showing any agreements or approvals made. And finally, although a process is in place to make changes to timelines and standard change forms are in place for completion by delivery partners for submission to the GLA, there was no evidence of GLA approval on the change forms. So those were the 4 key findings from that. I know Jem's here to answer some questions if needed as well.
Thanks.
Okay, thank you.
Yes, so thank you, Mark. We're joined by Jem McKenna-Percy. I don't know whether you wanted to add anything to that or give a general intro before we launch any questions.
Happy to take questions. Do you mean to the findings or the programme itself?
Probably just for the findings, because I think the programme itself will be looked at probably somewhere else. We like to try and confine ourselves to not being the committee of everything, which we could potentially become. Were there any? I don't see any indications. No. Oh, sorry. Yes.
Yes. So, thank you, Chair. And apologies, I'm obviously new to the Assembly, new to the committee, and still trying to kind of find my way around how these sets of paperwork work and everything. So forgive me if I'm not as vocal in this meeting as I might hopefully be in future ones. But this is one that I'm interested in. And slight, notwithstanding what you've just said about this not necessarily being the right place to look at the detail of the programme itself, I am interested to understand what do these projects actually involve, what kind of measures form these projects, and in particular how do any kind of real tangible benefits get measured and reported and captured relative to, are there kind of costs or disruptions that would affect residents within the areas that these schemes are looking at?
Thanks, Alex. Yeah, happy to give an overview of Future Neighbourhoods if that helps, and then answer your question. So Future Neighbourhoods 2030 is a community-focused initiative. It's provided, or the Mayor has provided, approximately £7.7 million over 3 phases of delivery to enable long-term physical improvements in 12 areas across London, all of which were chosen due to their high levels of climate vulnerability and economic deprivation. 2 of those are exemplars receiving the majority of that funding. So this is a pilot programme to explore how, by working with communities to co-design activity in their particular area that responds to the local needs of an area, we can tackle the climate and the ecological emergencies while also supporting jobs, developing skills and delivering a just transition. So there are 100 projects, approximately, just shy of 100 projects that have been funded, and these are across the 5 kind of sectoral themes of the Mayor's Green New Deal, so retrofitting, decarbonising energy systems, improving air quality, green and resilient neighbourhoods, and zero waste and circular economy. So there are approximately 50 delivery partners involved in the Future Neighbourhoods initiative, and the majority of those are community-based organisations, many of which involve residents' associations or representative groups of residents. In terms of the kind of outcomes and impact, we're kind of at a midpoint of the programme. So as per the original decision, which I think is set out in the report, an external evaluation was recently commission kicked off, and that report that piece of work will report later this year, and the Future Neighbourhoods are undertaking their own evaluation, which will also report early next year. This will look at some of the cross-cutting impacts of the approach, such as behaviour change, health and well-being, as well as report against the programme's KPI framework, which was designed by Arup specifically for the Future Neighbourhoods programme. So it will report against a range of those things.
And there's lots of words and jargon and you know, sort of all sounds very positive and well-meaning, but actually specific examples of things that you can point to say this has had a tangible improvement on X, Y and Z here.
Yeah, so the evaluation should report on that. I mean, I can kind of talk in anecdotal terms, but obviously that will then, the formal evaluation, which is being undertaken by CAG consultants, that will report on the kind of the figures, the kind of facts and stats against it. I'm happy to give you a couple of kind of project examples. So, for example, one of those kind of 100 projects is that the Mayor is supporting the regeneration of Maxilla Gardens, which is in the Royal Borough of Kensington and Chelsea, which is one of the 2 exemplars. This is a community-led initiative. It's led by Tayshaun Hayden-Smith of Grow to Know, with a number of other corporate partners as well as the Mayor. It's provided new green space for residents in the Nottingdale ward, which was obviously the ward most impacted by the Grenfell tragedy, and demonstrates for residents how they kind of can play a more active role in improving air quality in the area, and kind of more broadly that kind of issues around climate should also be treated as kind of issues of social justice as well in terms of access to nature. Another example of a project is the Story Garden in Camden, which is the area of green space. I don't know if you're familiar, but it's situated between the British Library and the Francis Crick Institute. And that's provided hundreds of residents with a growing space, and a community organisation there has delivered kind of training and mentoring for local residents to support them in kind of how to grow and then how to sustain that. That area is now going to be used, kind of taken over obviously for the extension of the British Library. So all of the infrastructure from that area will now kind of go out around Somerstown in Camden to be part of the kind of mosaic of kind of green infrastructure in that area, and obviously the learning for residents goes with that as well.
That's very helpful. And then my sort of second kind of query then is so having picked up on the issues that were mentioned in sort of the monitoring and so on of particularly these first two larger projects,
Mm-hmm.
you know, presumably looking to learn lessons from that to then make sure that for the any sort of wider rollout elsewhere, then there'd be more robust sort of procedure in place.
Yes. Do you want me to speak to the kind of individual findings around monitoring and risk, or was that a wider kind of question about learning? Yeah. So in terms of the monitoring, that was specifically your question, wasn't it? Just to respond specifically to that, and then perhaps on wider learning, I think Catherine wanted to come in. So there's a lag between the kind of quarterly reporting that we receive from the future neighbourhoods, so the grant recipients, and updates to our master tracker while we kind of discuss and kind of validate that information that comes from the grant recipients. Obviously, we don't update our master tracker that's held here in the GLA until we're confident that the information that's been provided should kind of go on to that. Kind of the RAG and the process columns, I think, have been conflated, so that's been a useful piece of learning from the audit exercise in terms of consistency of how the delivery team kind of use those two columns. Typically they're conflated. This finding obviously relates primarily to gaps in the information that's provided from the grant recipients, from the future neighbourhoods, to the GLA. So they provide the quarterly monitoring through a template that we give them. Obviously, we're not kind of responsible for the completeness and the kind of quality information that's submitted to us by the grant recipients. Obviously, our role is to then validate that information provided, interrogate any gaps in that reporting. Where there have been discrepancies, these are kind of picked up by the GLA-based delivery team, investigated, and as I say, then accurately reflected in the kind of tracker that we hold. During phase 2 of future neighbourhoods delivery, we kind of took action to kind of better support the grant recipients in that process. So we kind of provided more comprehensive information, I think, so that they could provide more kind of comprehensive information to us in their reporting. So we designed and we kind of consulted, and we've rolled out a more kind of fit for purpose and user-friendly template to the grant recipients, so that to support the kind of consistency of information that they give us. And each future neighbourhood now has a dedicated delivery manager. And I think from my perspective, this is really important in kind of building and maintaining a really in-depth understanding that we have of progress that's being made by the grant recipients, so that we're in the best position to then kind of validate the information that we're being given. Catherine, on wider learning, I don't know if you wanted to add to that.
Thank you. Just to say, I'm the Assistant Director responsible for the Climate and Energy Programme, so this is one of my portfolio. After we get a report like this from the Audit Panel, as well as thinking about what it means for the individual project, we also then share that learning across my unit, and I'll share it with colleagues in Good Growth. And then we also have something called a Grants Transformation Programme in the GLA, which is trying to really professionalise and standardise the way that we give grants to organisations. So these recommendations, some of them we now can't apply to this project because the contract or the grant agreement is already in the past. But as we think about our new projects for this new mayoral term, we'll take these lessons and apply them to those new projects.
Thank you.
Thanks. Just quickly, I think did I see an indication of that? Just quickly before I go over there, I suppose just two very quick questions. One is the objectives. Are they, presumably they're published somewhere, and then the publishing of achievements against those objectives, is that this is the report that you mentioned just now, so we don't or is there already some interim data against those objectives that you have published?
So the objectives are, I think Karen may well have put them into the report. If not, they're in the mayoral decision forms, obviously.
Yeah.
So publicly available. The evaluation will report directly against those. Yes, that's right. The future neighbourhoods, the grant recipients, report against our KPI framework, obviously on a quarterly basis. So we have obviously figures against those, but the independent audit will kind of take those obviously in their entirety and build a picture around impact overall.
Okay, and sorry, and when is that report due to be published?
Before the end of the year.
Calendar year or financial year?
Calendar year.
Calendar year.
That's right.
Goodness, excellent. Okay. But Bassam, sorry, did I see you indicating?
Thanks, Chair. So just great to hear the passion in terms of this particular project, and having had experience of delivering, creating and delivering a transform your space in Ealing, which is quite similar in terms of some of the outcomes that you're achieving here. Know Maxilla Gardens very well myself as well. I can see what impact these projects will make. So really just a plea from the opposite end of the spectrum, perhaps, to my colleague on that side, is just that you've got a number of new and current Assembly members who represent these areas. Declare an interest in terms of being a Northolt councillor, that's where I've grown up, and obviously being the Assembly member for that area. But you've got Assembly members who will be very interested to get into the details, the weeds, if they're allowed to grow as part of this, and find out a bit more information as this project develops and the learnings come out. So just to put that there.
Thank you.
I'm sorry, if I may, very quickly. One of the things we have seen with some of these interventions are that they save money. So there are lots of good green reasons to undertake these different interventions, but energy efficiency and installing solar energy in particular has been helpful both for schools in the neighbourhoods, also for social housing. So there's a real financial reason that the communities can benefit.
We're also doing some work with the Green Finance Institute at the moment, because obviously we have our two funded exemplars, but obviously the other 10 areas haven't received the same level of grant funding, but they do have future neighbourhood strategies in place. So the Green Finance Institute support to the boroughs more widely was also the original intention laid out in the Merrill decision. The GFI are helping us kind of learn about how to develop future neighbourhood project portfolios, so that some of these projects are more investment ready or grant funding ready in terms of project readiness and business case development, and able to attract financing and funding so that we can kind of get more delivered and bring more of the future neighbourhood strategies to life. So yeah, definitely part of the journey.
Great, thanks very much. I don't see any other... Oh no, that's just a casual pose rather than an indication. Excellent. In that case, I think there are no further indications. Thank you very much, Jem, for telling us about your project. I think Catherine, we have another item that you're staying for, but thank you very much, Jem. That takes us to Appendix 5, Business Continuity, where we're joined by Helen Ewan and Mark, if you want to kick off.
Okay. This audit reviewed the control environment supporting the corporate business continuity plan and assessed whether there was appropriate ownership of the risks to services. We concluded an adequate assurance rating for this audit, and we made 4 recommended actions which were all accepted. I think it should be noted that there have been significant changes which include relocating the headquarters along with the introduction of hybrid working and restructuring of directorates and units. The GLA is in the process of updating its business continuity arrangements to reflect the changed environment. This audit came at a time of change, and the findings and recommendations made reflect this position. And so a number of the findings sort of interconnected here, so one comes after the other. So we found that the corporate business continuity plan had been updated in December 2023, but had not yet been approved or communicated to all appropriate individuals. Following approval of the corporate business continuity plan, the GLA needs to update supporting business continuity plans for the critical directorates and units to reflect key organisational changes in line with the corporate business continuity plan. Testing of the corporate business continuity plan and directorate area business continuity plans have not taken place since 2020. There is business impact assessment guidance in place, which contains step-by-step guides on ranking tasks from a scale of 1 to 5 on priority and impact. The current guidance does not include the need to cover further key areas such as maximum tolerable periods of disruption, recovery time, objectives, and the minimum resources required to function. In addition to the recommendations that we made, we also provided some suggested best practice that the GLA may wish to consider. That's it. Thank you.
Okay, thanks, Mark. Helen, did you want to add anything before we see if we have any questions?
Only just very briefly to explain, Chair, why you've got me today, and that's just I've had interim responsibility for the facilities management team, who have typically taken a lead in this area, so I've been working with them on the update that colleagues describe, and here today to speak to that work.
Okay. Any indications that everyone's not... Oh, that is an indication. Yes.
Just a general question on how information generally is cascaded down to the members of staff that need to know.
In the event of an incident, you mean? So part of the system expectation is that at the management level there will be call trees in place, and that those rely on phone numbers far more heavily than they do on email because of any concern about systems not being active, and there's therefore a kind of particular emphasis on making sure that those details that are held are up to date and include personal numbers or details wherever possible as well, so that our local level managers have got that kind of ability to get messages out quickly. Over and above that, depending on the nature of what system impact there has been, you would use the intranet, you would use automatic emails out, there'll be an internal comms plan, but at a very basic level, making sure at the kind of team level structure, you've got the ability to get that message out quickly with an assumption that systems aren't working as they should be is really essential.
Okay, and then for people who come into roles in a senior position, how would they fit in or how would they be updated?
So I think the BCP itself, the corporate plan, includes a cascade out, so it will slightly depend on the role that you have in either response to the incident or whether it's just general information provision. So at the most senior levels that would go out from Mary as Chief Officer, for example, and then the cascade would flow. But if you are in a senior position and have a particular role to play in response and recovery, then there would be particular channels set up. And this, the corporate plan itself includes the supporting structures around secretariat support and things like that that would help us get messages out quickly.
Yeah, just on this point about the change that Mark was talking about, obviously we've changed from effectively a very centralised setup with most staff in City Hall as it was then known. I don't know what it's known as now, the helmet, most of the time. And so you have the pros and cons of a very centralised setup in the sense that information cascades are easier, but if that building goes down, then obviously everybody is now stood at the side of the Thames, probably heading for one of the many local hostelries. To find a place to sit. Obviously, we now have this work-from-home hybrid model, which has the benefit that it's more distributed. So, in a sense, there's a single point of failure. So, if the power goes down or there's a fire or something like that, everyone's still happily at home. And most of our IT systems are cloud-based, so they're not dependent on that building or this building. But obviously, that creates a communication problem, which is partly what you were talking about. Is there anything else that I've missed in terms of the transition that Mark was talking about from, the old way of working to this new hybrid way of working? Are there any other sort of changes to the nature of the risks that have been picked up in this, that other than the obvious centralised versus distributed one?
Yeah, I mean, I think the other obvious shift has been the move to shared services, which you've heard about in different contexts today, and that just means that the kind of extent of our oversight of system provision is more distributed again. On the one hand, more resilient, kind of not that same concentrated risk. On the other hand, more complexity and a kind of real need for us to make sure that we in turn understand the contingency plans in place in those places too. And I think that's what you can pick up in some of the report here, is that that's some of the work that's been going on in the background. And frankly, you need to pick a moment really where you land something like this and accept that it will continue to adapt and change. But I think that's probably the other major thing alongside that very significant kind of cultural or societal shift in how we work.
Okay.
I mean, you alluded to the building as well. I mean, I guess that's the obvious one, is that we're now across a couple of sites and in a different site. And again, that's been one of the prompts for the update to the plan, is just to understand what that means in this building and Union Street, along with those other subsidiaries that we use on a regular basis. Okay.
And you're happy that the sort of thinking through all of that has got to a point where it's sort of at least as good as it was, at least as clear in our own minds about what we do and how we cope with different risks as it was in the old setup? Yeah,
I think we would be clear there's more work to do still, particularly on the IT shared service side, which Vicky Ridley-Pearson is working through with TfL, just again to get that sense of cascade through the different systems. In the event of a major incident in London, for example, where would those impacts fall? and what would we do here as a result. But that work is underway. We did quite a bit of additional preparation in this space ahead of the elections, as you would expect, and that was really helpful in teasing out some of those relationships and the other partners that we rely on. I think, as the report suggests, we now need to just get on with the socialising of this through the organisation. The appointment of the new Executive Director for Resources is really important in that it brings together in one place most of the teams and services that will be critical in responding to an incident of this nature. So I think that will also be helpful in kind of making sure this is really embedded in the organisation. Then there's a big set of work for individual directorates to do then in updating, refreshing their own plans.
Okay. I don't see any further indications. In that case, I think we'll move on. Thank you, Helen. We'll move on to Appendix 6, which is the Solar Together London follow-up, where we're, I say joined, but still graced with Catherine Barber, who is here, and also Mark, if you want to lead off.
Okay, we reviewed Solar Together London in December 2022 and concluded an adequate assurance level. 5 management actions were agreed to improve the management of the key risks identified with an agreed deadline of December 2022. We found that since the original review, 2 of the 5 agreed action had been partly implemented and 3 fully implemented. This resulted in 2 further actions being agreed with management. The key findings were that lessons learned from Solar Together London should be captured, documented and reported on. Lessons learned should be taken into consideration for any future programmes, along with the findings of the planned evaluation of Solar Together London. The reporting of risks has been implemented through the Energy Working Group, along with ongoing reporting through the weekly briefings to the Deputy Mayor and Deputy Chief of Staff. A review of goodwill payments was undertaken and a mayoral decision was approved for the circumstances under which the GLA could provide financial support. Customers have now been helped by the combined funds provided by the GLA and iChooser. At the time of the audit review, 3 customers were awaiting refunds and these are in progress. A review was carried out of the complaints that were made and there are no open complaints at present. Finally, as part of the close-down process, the GLA should receive confirmation that the microgenerational certificate scheme standard has been met for all partial installations completed. That's the end of the report.
Okay, thank you, Mark. I don't know whether you had anything. Let me try that again in English. I don't know whether you had anything to add to that, Catherine, before we go to any questions.
Thanks. We've accepted those 2 recommendations, both on publishing the evaluation with the deadline of August. We're very close to that. Have a near final report. And then on the final one, which was about helping customers who had partial installations to get them finished and get all of the paperwork from the industry body, 84 out of 85 customers have now been satisfied their cases are resolved, and there's just 1 outstanding.
I think I might know who that is. Yes, okay. He happens to live in my constituency. Yeah. Okay. Sorry, that wasn't an indication. Well, actually, before I go over, I suppose my one question, not on that individual case, but the fund that you mentioned from the MD to kind of, I mean, is that, it sounds like you're quite far through that, so you presumably have a clear idea of whether that fund is adequate, inadequate, might require topping up to sort of deal with those cases that have got some kind of problem?
It is adequate. The Mayor's policy has always been that iChooser should front up the support to customers. They were responsible for the appointment of installers, including the 1 out of the 6 who failed, Get UK, and they've quite rightly taken on most of the financial responsibility, but the Mayor has made a contribution. But it will not use all of that money that was made available.
Right, the objective is not to spend it, but to have it available should it be necessary.
Exactly.
Okay, understood. Kripesh.
First of all, looking forward to the evaluation post-August. Something for the committee to, as we've had an interest in this from previous renditions of this committee, to keep an eye on that one. Previous schemes have been generally successful, so if the scheme was to move forward in a new iteration, are you confident lessons have been learned or will be learned and not reenacted again?
So that we ran five phases of this scheme, and the first 3 went calmly without incident. That's why we considered it a low-risk scheme as we extended it into the 4th and 5th phases. And out of 6 installers, 5 were generally satisfactory to customers, and 1 had financial problems and entered insolvency. And that was obviously what has taken up a lot of our time, attention and effort. So the evaluation looks at the whole of the 6-year programme, but of course many of the lessons are from what went wrong with Get UK and the controls or lack of controls that we had. We had to find ways to work around some of the lack of contractual levers that the GLA had in order to resolve the issues for customers. So one lesson I can mention, we didn't have direct contractual relationships with the installers. We went through our delivery partner, iChooser. We appointed them. That was our contract, and then their contract was with the installers who did the work on households' roofs. That meant we didn't actually have sight of the data from the installers. We had to ask for it. Eventually we got it, but it was often with a lag. It meant we couldn't reassure ourselves of the quality of the data that was coming in. And it was one of the reasons why I and my Deputy Mayor came and gave inaccurate evidence at one point to an Assembly committee because what we had been told didn't actually represent the facts. So one of the things we would look to do in future contracts is to make sure that we have sight through that chain. And we make that a requirement. Another thing that came up was the due diligence that was done on the installers as they were appointed. Get UK passed the tests at the moment that they were appointed, but they entered into financial difficulty shortly thereafter. And so one of the points that we would make is if we were going to run a scheme of this nature again, it wouldn't just be a one-off moment for checking financial stability of the company. In fact, iChooser themselves, the sort of middlemen, they've said that now, as a standard check, they look every quarter at the financial reporting and standing of their installers so that they spot any issues like this. Before they blow up, they can see any problems arising. So those are some examples that we've seen.
One sort of observation of the different rounds that I kind of spotted is that you had different suppliers, different contractors every year. For a scheme that is, in terms of technology, relatively new, is that usual? Were signs there that, you're having different contractors every single round, it's not the same ones winning over a period of years, although that's not a good thing either, but that sort of sustainability or that sort of track record wasn't visible from if you just plainly looked at who won the different rounds every year. Was that a telling sign or not really?
So I think it's an immature, although maturing market, and certainly in 2017 when this programme began, there wasn't such a big solar industry in the UK. There was fewer than one installation in London every day, and that was one of the reasons the Mayor set this up. There wasn't government support provided at the time to incentivise the installation of domestic solar, and so it's perhaps not surprising that there weren't large companies active in this space. I think over the last 6 years, of course, there have been more entrants into the sector, and it's been quite competitive, and that's why you've seen different companies come forward. We've spoken with iChooser about their experience both in the Netherlands, which is their home base, and then in other countries where renewable energy has got a higher proportion of the grid, and asked them what they've seen there and what we might expect here. They've now started to have different tiers of installers for their phases, and I believe they're rolling this out in the UK in other jurisdictions outside London, where they will take installers on for a small number of homes. Then if they are satisfactory, then in the next wave they might give them a sort of medium-sized chunk and then a large one, so they're testing them as they go. Personally, I would expect the market to consolidate a bit as you know, different players offer their services, and some are more successful than others, and others fail, as we saw with Get UK. I'd also say, of course, we don't assume that iChooser will always be the only operator of these intermediary services. So were we to run a programme like this again, we might be procuring for that, you know, somebody else who could do that middleman service, or we'd be testing who was best placed to do it.
Thanks. Just on that, obviously one of the issues that was flagged up in the original audit, which I think was that December 2022, I think that came to us, then abouts anyway, was this thing of iChooser being entirely responsible, which you sort of hinted at earlier, where they're allocating the jobs to companies, which you've just talked about how they're changing how they do it. But one of the audit's findings was that they kept allocating jobs to one particular company, Get UK, even though there were problems and even though there were sort of issues starting to arise, they kept allocating the jobs, and we didn't seem to have any lever to tell them to stop. So is that, you didn't quite say in what you were saying just now, that if we were going, I suppose well, let me say it less diplomatically, if they're the only game in town, which they were previously, there was an exemption, I think, to the procurement rules to allow us to just allocate the work effectively to this one company. And if they say, no, we don't do it that way, we won't give you that control, we're going to keep that control, you can just, you know, look through an observation window and be happy with whatever we do. If that's the take it or leave it deal that we have, would that be a leave it, you know, a make or break thing for us to say we're not going to accept it on those same terms that we did last time?
Well, I would say I don't think iChooser have enjoyed this experience either over the last couple of years, and they definitely don't want to repeat it. It's not been good for their reputation. And while we haven't decided whether there will be a sixth phase in London, they're very active in many other cities around the UK. So they've certainly been taking steps to do better due diligence, as I said, to look on a quarterly basis at the performance of their installers. One of the things that they appointed Get twice. It wasn't repeated multiple times. It was phase 4 and phase 5. And I think looking back with hindsight, at the moment that Get UK applied for phase 5 and the checks were done and they passed, that was probably just when we were starting to see an increase in customer complaints. Could we have spotted at that point, either iChooser or the GLA, that there was a problem? It hadn't reached the level of 10% of cases that usually flags that there's an issue. But I know that iChooser have been putting in place more rapid collection of feedback from customers. Once they sign up, they have a survey, they enter into contract with the installer. They want to get more real-time information so they can spot the problems arising. So I think they're forthcoming. It's a bit of a hypothetical question of is it good enough if we were contracting right now? We're not in that position. We haven't made a decision to go ahead with the sixth phase, but we'd definitely be looking at our contract with whoever was providing that service and being a bit stricter in terms of the checks that we wanted them to do.
Okay, and you've sort of hinted at my next question, which I think perhaps was coming up there as well, about whether obviously it's not your decision, it'd be a mayoral decision by definition to proceed. Is there a sort of penciled in timeline, or, you know, is this something that's being actively considered? Is it way into the long grass, you know, on the basis of the experience here? Because on the face of it, I hesitate to say this, on the face of it, it did not look like a terrible plan to get involved in. You know, it seemed like a reasonable thing, relatively low risk for reasons that were explained earlier, but just went wrong.
Yeah, so we've supported 3,200 homes in London who've got solar energy as a result of this, who will have benefited from lower prices for energy compared to, you know, what's been an expensive couple of years for customers. So at this stage, we're looking at all of our options for how we support solar energy, renewables, decarbonising the grid in London. The Mayor obviously had in his manifesto a commitment to helping schools to reach net zero and specifically mentioned solar. So I would say that my focus and my team's focus right now is understanding how we can implement that commitment. We always said that we would look again at solar together once phase 5 had completed, and we're very nearly there, so we'll look again.
Okay. And then, sorry, I had one other question. It mentions in the audit there's a monthly environmental implementation group meeting that's sort of part of the review that the Deputy Mayor attends. And I just wondered which Deputy Mayor attends that now since Shirley left.
So I think we've held one meeting of that in June. It was chaired by the Deputy Chief of Staff and attended, I believe, by the Policy Director and Delivery Director from the Mayor's Office. So it was well represented at the mayoral director level, but there wasn't a Deputy Mayor, obviously. I hope to have one soon.
Is your understanding that there will be one at some point?
Yes.
Or, okay. But you don't know when?
No.
Okay. We shall...
I await
we await
eagerly.
News. Okay. I don't see any other indication. Oh, there was another indication. Alex.
Quickly, thank you. I think you've already answered what I was going to ask about some improvements to sort of due diligence to make sure that we didn't have a repeat of what happened with that provider, so through the ongoing rather than one-off monitoring, which is great. But just as a sort of curiosity, roughly what proportion of the overall programme was affected by the issues with Get UK?
Yeah. So the first 3 phases were unaffected. That covered about 1,000 homes. Then phase 4 was Get UK was the only installer who was appointed for that one. So that was over 1,000 homes that they did. They did complete some of those, and those customers, got all of the paperwork and those were finalised. But then they started experiencing financial problems. It was a moment of high inflation, so that put particular pressure on all small companies and Get UK as well. And then in phase 5, Get UK was one of 3 installers. So for that would have been a few hundred homes who were affected, but the other 2 installers, Solar Bureau and Dynamis, continued working. And then when Get UK entered insolvency, they agreed to take on some of the customers who'd been left stranded, and they completed those installations.
Okay, I think now we do have no further indications. Thank you, Catherine. We now move on to Appendix 7. We're getting dangerously close to the end here. We have Appendix 7, which is the Adult Education Budget Good Work for All Fund follow-up, where we are joined online by Paula Mulroney and Ayo Akande. And Mark, if you want to kick off.
Okay, we reviewed the Adult Education Budget Good Work for All Fund in September 2022 and concluded a substantial assurance level. One management action was agreed to improve the management of the key risks identified, and we concluded that this had been implemented. The Good Work for All Fund programme has now completed, and the one management action has been implemented, with performance and risks being reported through the unit governance arrangements and up to the AEB mayoral board. An evaluation of London's adult education budget full-year report 2022-23 has been prepared. A reconciliation of the Good Work for All Fund has been undertaken as part of the AEB yearly process, and reporting of the delivery of the Good Work for All Fund has been reported to the Adult Education Budget Mayoral Board. So the one action has been implemented.
Okay, I can see Ayo, I don't know whether you wanted to add anything before we go to any questions?
No, nothing to add at this point.
Okay. Did anyone have any questions on the AEB follow-up report? I don't think I had any questions on it, actually, so it seemed all seemed well. I think I'm glancing at my scribbled notes. No, I don't think I had any questions. So thank you for joining us, Ayo. I do apologise. I hope you haven't been sitting around for a very long period of time waiting for that brief moment of spotlight, but thank you for joining us.
Thank you. Thank you.
Okay.
Cheers.
That takes us to Appendix 8, which is the GLA 2023-24 Core Growth Hub Grant Funding Auditors Report. Mark, if you want to.
Okay, this is slightly different. This isn't a systems audit, but it's something that we do every year, where we, as part of the final claim that's made by the GLA, we check what's been claimed, make sure that it's eligible in line with the agreement. So what we did was we examined the Core Growth Hub grant claim submitted by the GLA to the Department for Business and Trade, and concluded that the claims for payment were in accordance with the Department for Business Trade grant offer letter and had expended monies to cover eligible expenditure specified in the grant offer letter, specifically related to the project. In addition, we found that adequate records had been held to support the claim for payment of the grant. So then our report is then added to the final claim that goes to the Department for Business and Trade.
Okay.
Okay.
Did anyone have any questions on Appendix 8? Shaking of heads? Okay. That takes us briskly on to Appendix 9, also known as the final appendix. Expenses and benefits government's framework, including carbon offsetting procedures, advisory note, for which we are joined.
Right.
Enver is still here to answer the questions, should we need.
Still. Okay. Following a request from the Interim Chief Finance Officer, an advisory review of the benefits and expenses framework was undertaken. The review covered recommendations made by the Oversight Committee, a comparison of the GLA policy with other UK cities' policies, a review of the process in place for international and domestic trips, the use of the GLA travel company, carbon offsetting procedures, and the transparency reporting. From the advisory note, a series of suggested actions were made and discussed with the Interim Chief Finance Officer and the Mayor's Chief of Staff, and the advisory report is also going to be reported to the Oversight Committee. In addition to the suggested actions that we've made, we will be providing ongoing advice on the best way to implement those suggested actions.
Okay. Does anyone have any questions on that? I had one, really, which was in terms of strengthening the processes for accepting travel paid by external sponsors. And I suppose I'm thinking of there was some kerfuffle around an airline paying for a mayoral party's trips to the United States. And I think there was a clause, I believe I'm correct in saying there was a clause in that which required the mayor to do some promotional work saying how wonderful the airline and its services were. And it wasn't, I think that was initially denied and then accepted. I think I'm correct in saying that. Is that the sort of thing that this new process would catch? Because obviously that does, let's not get into the merits of the trip and the sponsorship, but in terms of the question marks about who paid and on what basis they paid and whether there was any payback, you might call it, in return, you know, an agreement to do sponsorship, would the new process either prevent that sort of repayment in those terms, or would it require that to be transparent from the start, that the mayor had agreed to do this in response, in return for that?
Well, one of the suggested actions was a series of checks to carry out prior to accepting travel paid for by external providers, and so there's a checklist that we put together. I think it's 5.2.
I think that's the checklist I was looking at, and I suppose perhaps I should have said that I'd looked at that and I couldn't quite determine how that would apply in that particular set of circumstances. So would it mean that there couldn't be a deal whereby, I don't know who else it would be besides the mayor, but anyway, let's say the mayor hypothetically agrees to do some publicity for a sponsor in return for the sponsorship that they've given. Would it prevent the sponsorship being offered on those terms, or would it allow it but merely require that it be transparent in terms of this was agreed and this is why the mayor is tweeting about how wonderful, I don't know, this particular product was?
I think one of the key things in here is the documentation of the decision to accept the travel, also the issue about reviewing it and regular reporting. I think that's fair enough. I think so.
So your judgment is that it would be allowed. I'm not suggesting that I think it's good or bad
either
way. I'm trying to understand what it means.
I suppose.
So it would mean that it would be permitted, but it would have to be public. Is that your understanding, Enver?
Yeah, I think that for me the first two bullets I think sort of cover that. There's got to be bona fide and it's no undue influence. So the transparency point that you're making there is key to that. Yeah.
Yes, I suppose I was unclear whether the mayor having to tweet out that he enjoys a particular airline is undue influence or not, because it's not really a decision. So I suppose one interpretation of that would be if the mayor were making a decision in relation to, some large public spending decision, that would clearly be caught by, we've decided to, for some reason, allocate something that directly benefits this business by a large amount of money. I think that would clearly be caught. I don't know.
Sorry, there is an addition. Sorry, 5.3. There's an additional point about making clear to the external sponsor that sponsorship in no way equates to an endorsement of a company or its products. This should be made visibly clear on any promotional or other materials relating to the event. So, if you take that as trying to capture that
Yes.
within that 5.3 maybe, hopefully.
So that sounds like that wouldn't allow that sort of arrangement. But
Yeah, and I think it's just setting that up
if
front.
there were an
you know.
arrangement of that sort, it would have to be transparent.
Yeah.
Okay. Any further questions on all of that? I'm seeing shakings of heads. Nope. Okay. Well, thanks very much. That brings us actually to the end of the internal audit. I've forgotten what we call this item now. It was so long ago that we started the internal audit reports. Thanks, Mark, for your dogged work through all of those. Can I ask the panel to note the contents of the recent internal audit reports attached to the report at appendices 1 to 9?
Agreed.
Excellent. Takes us to item 9, which is the corporate risk register. Can I ask the panel to note the corporate risk register? No. And are there any points members wish officers to consider ahead of the next 6 monthly refresh? No. I don't think so. I mean, I wasn't expecting there to be. I think we spoke quite a bit about inflation last time, and that probably has not got worse, so that's good news. Item 10, draft governance statement. Do members have any questions or comments on the draft governance statement for 23-24? No. Item 11, monitoring of expenses and taxable benefits. Can we note the taxable benefits and expenses incurred by the Mayor, London Assembly members and senior staff during 2023-24 and the period April 2024 to May 2024? Yeah, noted. Excellent. Audit panel work programme. Can I ask the panel to note the work programme? Noted. Well noted. Excellent. The next meeting of the panel is scheduled for 2 p.m. on Thursday, the 17th of October 2024 here in the chamber at City Hall. I've not been made aware of any urgent business. Thank you. This meeting is now closed. Great. Thanks, everyone.
This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by.